Good afternoon. Welcome back to the channel. This video is not financial advice. I'm not a financial advisor. Do your own research, make your own decisions. All right, guys, welcome back. So I have some interesting data to go over with you. And I just looked this up for the first time. I've looked into Bitcoin liquidations before because I want to get an idea. Is there more in aggregate, is there more buying pressure or selling pressure coming from the liquidations that are happening on the leverage trading market? And what I found out was that there was overwhelmingly more selling pressure coming from the leverage trading market with Bitcoin than there was buying pressure, right? So it was having a negative impact on the spot price in aggregate over longer periods of time. So my past video that I just did, I wanted to look up ICP just for shits and giggles to see what I was going to find. Now, I might be reading this wrong. I will openly say that to start the video, because the format that they use has changed since I used to look into this back in like late 2021. But it looks like there's more in aggregate, more longs being liquidated than shorts, causing more selling pressure from the leverage trading market on the spot price. Okay, so there's two different sources that I want to use here. One is Coinalyze, and the other one is CoinGlass. And these are the two, like if you type in ICP liquidations into Google, this is what's going to pop up. And so they measure it kind of differently, and that's why I'm not 100% sure that I'm reading this accurately. So feel free to double check on your own. And if I got anything wrong in this, or if I'm reading this wrong, let me know in the comment section below. But they both, I guess, so they both kind of measure this differently. It's kind of inverted, it looks like. So it looks like that the red candles down here are longs being liquidated, which cause selling pressure. And on the other one, it looks like the green candles are longs being liquidated, causing selling pressure. I think it's just how they just decided different ways, I guess. I mean, it doesn't really, the numbers do make sense if you invert them. It's like they're pretty much reporting on very similar data. So that's the only thing that makes sense to me. But right here, this is CoinGlass, and this is going back to early June. All right. So the greens this is ICP total liquidations, okay, across all leverage trading exchanges that have futures contracts for ICP. So per this, what I'm looking at, the greens are longs being liquidated. Now look, you don't even need to run the numbers here to know that there's more aggregate selling pressure, at least from what this looks like. Okay. I didn't make this data up. I'm not pulling this out of my ass. Maybe I'm reading this wrong, and there's actually more buying pressure coming from the leverage trading market. Maybe that's the case. Okay. If so, let me know in the comment section. But what it looks like is that there's more longs being liquidated than shorts, meaning it will have, in aggregate, there's more selling pressure coming from the leverage trading market on this particular asset than there is buying pressure. And keep in mind that this selling pressure that's affecting the spot asset is more or less just paper derivatives. So there's nothing, and I mean nothing, that the people at dfinity are going to do that's going to eliminate this risk. Okay. Now, assuming I read this 100% the wrong way, okay, so it's actually 180 the way that I'm talking, assuming that's the case, okay, and there's actually more buying pressure coming from the leverage trading market, assuming that's the case, okay, it could still, the system is in place to generate more selling pressure coming from paper derivatives on the spot asset. The system is still in place to do that. That's really what you need to understand. Okay. So the same way like with FTX. Okay. So this looks like on Coinalyze, it looks like the red candles at the bottom here. I'm talking about the bottom, not the price. It looks like the red candles are longs being liquidated, and that aligns with how it has it laid out right here, right? Longs, in parentheses, sell. Longs get liquidated, it causes selling pressure. Shorts get liquidated, it causes buying pressure. And so that's how they have it set up right here with these red candles with Binance, Bybit, and OKX. And they call it longs, so selling pressure. However, with CoinGlass, longs are green candles as it has it laid out right here. And there's more longs, total liquidations. There's more longs being liquidated than shorts being liquidated. So the leverage trading market itself, unless I'm reading this absolutely wrong, is having a net negative impact on the ICP spot price long after FTX. This goes back, what, to June of this year? And if you invert it and you look at it that way, they would read the same. So I'm all cool having these conversations about dfinity needs to do this and they need to change their tokenomics and so on and so forth. All I'm saying is that there is a mechanism in place that can negate spot buying pressure regardless of what they do. Even if I read this entirely wrong, that's still, the system is still in place. So feel free to look into this for yourself. Actually, I would prefer multiple eyes on this. And I don't even feel like I should be the one that's, going over it, but it's like, I did this with Bitcoin, so it's easy for me to just look at this but look into this for yourself. And if I got something wrong, let me know in the comment section below. But there's nothing that they're going to do that's going to stop this ever. And if I did read this accurately, yes, there is more selling pressure coming based on paper derivatives that aren't backed by spot. And if they are, they're backed by a very small percentage. 1, 2, 3, 4%. Let me know your thoughts in the comment section below. This is not financial advice. I'm not a financial advisor. Do your own research, make your own decisions. Take care. Have a good day. I will see you in the next video.